All right. Another Tuesday. Hi, everybody. My name is Mike Patel. As you may already know, if you're a regular viewer on my channel, welcome. For those of you who are new to my channel, welcome to my live stream. I have this live stream every Tuesday at 5 o'clock California time, and we shall continue. We have an exciting topic today. Let me turn off the music here. We have an exciting topic, and the topic is of concern to everybody, especially home sellers and home owners. What is happening out there? There is too many different kinds of news out there, too many different kind of reports out there. Hell's breaking loose, markets crashing, home prices are coming down, rates are coming down. Wait a minute, rates are coming down? Well, we'll talk about that. Rates are not coming down. They did come down, but they went back up again. They're still over 6%. But today's topic is housing market warning. The red flare is here for homeowners. So here's the thing. We're at a point where even Moody's Analytics is flashing a red flare for housing. That's not a clickbait. It's a signal that we're heading into a tougher, slower real estate cycle. But for homeowners, that doesn't mean panic. It's time for preparation. It's time for strategy, whether you're thinking about moving, remodeling, changing jobs, or whatever. So we're going to go through that today. And with me today, I don't have any guests, so I'm just going to talk and give you as much information as I have. And I get this information from a lot of reports I read, from a lot of blogs, from a lot of YouTube channels I watch and follow, and by talking to home sellers and home buyers every day. I am what you call boots on the ground. I just showed a house today for the second time, and this was showing a house to a non-profit organization, and there was 5 people coming in today. Last time there were 3 people coming for the same house. So they have different questions, different expectations, and I know what they're telling or what they're thinking, whether it's right or wrong when it comes to home buying, home selling, the prices, the mortgage, the recession. Because I listen when they're looking at the house, or when I'm talking to a buyer, or when I'm talking to the seller. We listen a lot and we see different signals. So we are going to go through certain things. But let me show you what the report is showing from the Moody's Analytics. So let me share a screen quickly. Let me see here. We got several of these. Let's look at this one. Okay, this is from Property Casualty 360, and it says that the U.S. housing market headed for a cliff. Moody's economist cautions the challenge: persistent high mortgage rates paired with high housing prices. Well, we know for a fact right now that half of United States, not exactly half and half, but portions, which is up to a half of United States, home prices have actually declined. And half of USA, again, different portions, different areas, have home prices went up. So we're not sure which way it's going to go. On one hand, home prices are declining. On the other hand, home prices are going up. So it's 50-50 right now. But the prediction is, the forecast is, and we'll look into that more, is that in 2026, the home prices are going to go up anywhere from 1 to 2% nationwide on average. Of course, Florida, Texas, Arizona home prices have declined anywhere from 3 to 10%, depending on what city you're in. But certain other states, like the northeastern states on top, prices have gone up. So let's see what happens. But let's see what this report says. It says that the warning signals are flashing red for the U.S. housing market, according to Mark Zendy, chief economist at Moody's Analytics. After weeks of cautious concern, Zendy has escalated his outlook, posting on X that he now believes the situation has shifted from a yellow flare to a red flare, a clear alert that trouble may soon hit not just home buyers and home sellers, but the broader economy as well. And I'm going to read some more. Let me see here. Yeah, so let's leave it at that and kind of move on and kind of discuss. What do you feel is happening in the housing market? Several things. Number one, are the prices going up or are they coming down? Interest rates are where they are. Today's October 6th, Monday, actually going to be Tuesday. So the interest rate is around 6.38% the few days that I looked at. So they're around 6%. The administration, Trump administration, has been forcing or threatening the Feds to lower the rates to 3%, 4%. That is not going to happen. Number one, that will give a shock to the economy, and the economy will react wildly. And I don't think that's going to happen. So for those of the buyers or even sellers who have 3%, 4%, and they tell me, hey, Mike, why should I sell my house at 3% and buy a house at 7%? If you're waiting for that 3 or 4%, you're going to stay in that house forever and ever and ever. So don't expect 3%. At least that's my opinion, based on a lot of things that are going to happen. And the only reason the 3% came about is because of the COVID led to that situation. Right now, we don't have any drastic situation that can lead to 2 or 3%, or that can lead to 2 or 3%. So that's what's going on. Let me share another screen here and see what they're saying. So let me switch gears here quickly. Let me remove this and add another one. Add screen here. Whoops, just 1 minute. Share screen. All right. See if you can see this one. Yeah, it's from Fortune magazine. And if I can get to, sorry that I have to share this. Hold on. Fortune magazine. This came out in July 20th, 2025, pretty recent. And they're saying that the top economist sounds the alarm even louder on housing market and says home builders are giving up. And what happens is a lot of the buyers, they want to buy new homes. Everybody wants to buy newer homes. And when the new home construction sales slow down, that's an indication of a major slowdown, because a lot of the people who have been in their house for 10, 20, 30, 40 years, and when they make a move, they prefer newer homes because it's newer, less maintenance. You got a lot of new gadgets in there, new appliances in there, and maybe new areas. So they want to move to a different area. But we all know that the new construction houses has slowed down considerably, as this report says here. Let's see what it says. With mortgage rates remaining high and looking unlikely to drop much anytime soon, the housing market outlook is quickly deteriorating. Moody's Analytics chief economist Mark Zandi said he thinks a red flare, same thing that we saw in the other article, is more appropriate for the housing just weeks after he sent off a yellow flare, which is the same information we saw. What Fortune is saying is that the housing market is getting so weak that is poised to become a significant drag on overall economic growth, according to Moody's. Let's read further. Existing home sales unexpectedly rose in May, but still marked the slowest sales pace for any May since 2009. Further evidence that the typically busy spring selling season has been a bust. And lastly, meanwhile, sales of new single-family homes sank 13.7% in May from the prior month, and single-family home starts dropped 4.6% in June, with permits down as well. So one of the things I've noticed, one, as you may know, is a lot of the homeowners have sued a class action lawsuit against D.R. Horton. There's been a lot of lawsuits to D.R. Horton as far as financing goes, the way they did the loans, and also because the quality of the construction has not been up to par. There's a lot of homeowners who bought in the last 2, 3, 4 years, 5 years, have a lot of complaints about the quality of the construction, mold in the house, faucets leaking, showers leaking, bathrooms leaking, and very, very poor quality work, cheap work, paints peeling off. So we have all kinds of complaints going on, but we're not going to talk about that. So what we want to talk about is what's happening in the market, what may happen in the market. We're not going to talk about lawsuits. There's another slide I want to share with you. This is actually a market update. I belong and subscribe to a report from Keeping Current Matters. They come up with a report every month. And from what I've seen over the last few years that I've been following them, they're very accurate and very current. So I'm going to try to share an actual video. Let me see. I'm going to stop the screen here. Let's see. How do I get out here? Stop screen. And I'm going to share, and actually we can watch the video. So let me get to it. And hopefully we can see it, or I can share it with you. So let's see how it is, and then we'll talk about it. So here we go.
Hey, welcome to this month's monthly market report for September 2025. I'm David Childers, and if you followed along with the monthly market report, you know exactly what's happening in this market. So I'm going to do a couple of things today. First, we're going to talk about some of the economic uncertainty and how it's affecting real estate right now. And then two, we're going to talk about every major downturn in the last 5 decades and what's happened in our business. Maybe not even downturn, maybe the right word is drought. Just like what we're in right now, and give you some perspective on what's ahead. So we'll do that. We'll wrap up as well with Kate Rezabeck on our team, talking about the most important conversation you can have right now. And with that as a backdrop, let's go ahead and get started. All right. Mark Zandi said this: the risks are increasingly high that we're going into a recession. We're not there yet, and maybe this thing gets turned around, but that's increasingly becoming hard to do with each passing week. So, I'm not here today to say we are heading in a recession. I'm here to say this is what's being talked about in the media right now, and we need to understand it. We need to understand the implication and the impact on housing so that we can guide clients forward, effectively. But the reality is there are a couple reasons for this. First, inflation remains elevated. The Fed has said they want inflation to be around this target of 2%, 2.9%. And some have said, look, we're not going to get down to 2. We're going to kind of hover in this area. But that is a fact that inflation remains elevated, and it remains above where they would like it to see. Michael Strain said this: I think the worst is yet to come when it comes to tariff-driven inflation. I think over the next few months, we're going to see more and more evidence of the tariff showing up in inflation. There's certainly many schools of thought and effectiveness, non-effectiveness of tariffs, all of that conversation. Not here to sort of debate that. But you think inflation being a little bit higher, you think the talk of tariffs certainly could drive inflation in a transitory way in the economy. That certainly is something that the Fed is watching. And unemployment has held steady. Most recently, 4.2% unemployment rate in this country. Still relatively good, I think, when you think about historically. But what is the underlying pin of this is there are some cracks in the labor market. Job growth is sort of stalling out. We're certainly not seeing the job growth that we've seen. So these are all the reasons I'm trying to make the case for why it's being talked about right now in the media, that we could be heading towards a recession, like what Mark Zandi said, increasingly heading towards that direction. The reason why I bring all this up is because these are the things that consumers are thinking about right now. How do I know that? Well, this right here, LendingTree just did a study. 2 in 3 Americans think a recession is coming. 74% of Americans admit that world news or current events affect their financial decisions. Oh, by the way, it affects their decision on a major purchase like housing, other things as well. But that's the sort of climate that we deal in economically. And many people looking around going, okay, what's going to happen here? We have to take that into account and meet people where they're at and how they're understanding. But I think an economic dip can bring opportunity, but you have to be careful. You have to know how to navigate it. So let's talk about what could be on the horizon for the economy, how that's affecting the housing market right now, and even some things that are already in place that are affecting the housing market that we need to be aware of. Start right here with Redfin. Daryl Fairweather does a great job as a chief economist. The Fed is in a tough spot. Some argue that a weakening labor market, it's time to bring rates down. Certainly, we've heard that. Other points to rising inflation say a rate cut is misguided. So you have people on both sides of the camp there. The most likely scenario, the Fed will cut rates to stabilize the labor market, viewing any inflation from tariffs as temporary or transitory. But if that assumption proves wrong, we could be looking at rate hikes again in 2026. So what the Fed is essentially saying is, hey, we think a little bit of Inflation will happen from tariffs. We think that will sort of move through the economy be temporary. But this sort of weakening in the labor market is leading to a Fed rate cut. 91%, according to Wall Street, 91.7% probability of a September this month Fed rate cut. Now, this is not the 30-year mortgage rate. This is the Fed funds rate. Hopefully, you know that. You've watched the monthly market report before. But even right now, the Fed has an impact on mortgage rates. Even the market that we're in, the average 30-year fixed around 6.5% right now. This rate cut is already priced in. We've already seen a little bit of relief in mortgage rates, basically with investors assuming the Fed is going to cut the Fed funds rate in September. So don't expect a big swing in the market. We'll talk more about this in coming monthly market reports, but we're watching the spread right now. That's come down. And we want all of these things to point to a little bit better mortgage rate environment. Go back to Daryl Fairweather here from Redfin. Today's mortgage rates already have anticipated September Fed rate cuts. They're priced in. That means when the Fed officially announces a cut, we shouldn't expect a significant corresponding drop in mortgage rates, just like I said. So Wall Street's sort of looking at the Fed saying, okay, what are you going to do? The housing market's looking at the Fed saying, what are you going to do? And ultimately, I recorded a video this morning that'll be on Instagram where the average mortgage payment going from May this year until right now in September has dropped by about $250. That is a good thing. You see the decline in mortgage rates after the weak jobs report and sort of this assumption the Fed is going to take action. We want to pay attention to that, but it's meant good things for borrowing rates right now, and we want to see that continue as we go throughout this fall season, and more people after the summer may be jumping back in to look.
Okay, I just want to make a little comment here, and we'll continue this. I was talking to another expert who knows a lot about real estate and mortgage. They were saying that everybody's waiting, especially the buyers. They're all waiting for the mortgage rates to drop, and not just drop, to drop significantly to maybe 5.5%, even 5%. Let's say that does happen. Here's what's going to happen, according to this expert. If the rates drop to 5 to 5.5%, we're going to have droves and droves and droves of buyers coming into the market who could not qualify at over 6%. Now they can qualify. So they're going to come all on the market. There's going to be multiple offers. And guess what happens when there's multiple offers? Because remember, inventory is higher than last year, but it's still a lot lower than the normal inventory. So when all these buyers come in and there's multiple offers, the only one thing will happen. Home prices will start going up and up and up again, which means when you buy that house, the property taxes will go up. Everything else will go up. So dropping the mortgage rates, especially all of a sudden, will create a buying frenzy like we saw in 2021, 22, when the rates were 2.5%, 3%, and it's going to drive the prices up. In fact, a lot of the buyers who bought sight unseen, who paid $100,000 more, $200,000 more, $50,000 more, seeing the house for 5 minutes and getting out with almost 100 people, 100 buyers in the house. A lot of them are regretting because they said we made a rush decision. We made an anxious decision. We made an emotional decision. And a lot of them are regretting buying the house in a frenzy, in multiple. So I think rates dropping to 5 and 5.5% is just going to make life tougher for the buyers and also for the sellers, because a lot of the sellers said that, hey, I have 10 offers. I don't want to sell, even if I'm getting 100,000 more, because when I go buy something, now that there will be buyers and they'll be in the same situation. So it's not going to help the inventory. It's not going to help the buyers at all. Prices will go up. But with that note, let's continue with this report from Keeping Current Matters.
Looking for a home. Matter of fact, if you look at the CME group, that's sort of the place that most Wall Street investors go to say, okay, what's going to happen with the Fed funds rate? 2 cuts is the odds probability right now for this year. So as we start to think about that, it gives you a little bit of perspective on what Wall Street is thinking about Fed cuts. We could see a little bit more relief in mortgage rates. I don't think we're looking at forecasters say we're going to see a massive change in the 30-year fixed mortgage rate, but we pulled this right here from Fannie, from MBA, and from Wells Fargo, the average of all of these going through the third and fourth quarter of this year, and then the first and second quarter of next year, see getting somewhere down 6.4%. Now, my personal opinion of this is we'll see a little bit better mortgage rate environment than what these forecasters are saying. I don't think they want to get bullish or want to sort of stick their neck out and say this is what's going to happen. But the bottom line is this will improve affordability for folks out there as we talk about home prices here in just a minute. But the truth is markets are operating very, very differently across the country. Odetta Cushy said this: while there will be significant regional variation, the underlying fundamental conditions of the national housing market support a natural moderation of home prices rather than a sharp decline. So we're seeing moderating home prices right now. And it's certainly not equal among all areas of the country. You see this right here, less in the West and sort of South, more in the Midwest and up in the Northeast, more home price appreciation in those areas. And a lot of that's due to supply. We've talked about this. Supply in the West and the South has already recovered from pre-pandemic levels. And so that's having an impact on home prices. But if you want to see where home prices are ultimately going, you have to look at list prices. And the bottom line is list prices have already flattened out. This is a look going back to the beginning of 2023, and you see sort of this sideways movement in the median list price of a home in this country. And that's interesting, right? As prices start to moderate, you're going to see list prices flatten out. But the bottom line is this is an even longer view look going back to 2017. This has been happening for the last several years. We've seen list prices sort of flatten out. The other thing that we can confidently look at here is that home price growth has slowed this summer. You see sort of the downward trend there. This goes all the way back to the beginning of 2023, so call it the last 2.5 years, and we're seeing less home price growth than what we saw in the previous couple of years. Now, I bring this up for a couple of reasons. I think anybody selling their home right now needs to understand median home price, the list price is flattened out, that home price growth is decelerating, slowing down, and the market is changing. You could say really that the market has cooled off, and I'll give you a perspective from Daniel Hale in just a minute. But I think being able to educate someone right now is our number one job. I was at an event and I spoke to an agent, and she said, I like to sit down with somebody and says, has somebody taken 5 to 10 minutes to educate you on what's happening in this housing market? And most of the time, she said, the answer is no. Somebody hasn't done that. And so I can step in there, this person saying that, and educate them. But Daniel Hale said this: the housing market has cooled modestly in 2025, but the extent and persistence of rebalancing really varies across the country, and regionally home buyers and sellers are likely to experience very different markets. That goes back to the graphic that I showed you in the South and West. Inventory has recovered from pre-pandemic levels, also seeing less price growth in those areas as well. So very, very different market depending on where you're at. I think the other thing that most people are wondering right now is what's ahead in this real estate market. And, I was at the Tom Ferry Summit here just last week as I'm recording this, and his message in his first session was every drought ends in recovery. Every drought, every tough time in our business ends in recovery. And where that came from is we did a study with Tom and went back for the last 6 decades and said, okay, what happens in the market when things start to sort of downturn, and I think the impact there is something we want to pay attention to. And there have been several downturns going back to the early 80s recession, mild recession, early 2000s, the .com, then 2008, the great financial crisis. Obviously, we know COVID, and right now we're in sort of this drought and downturn. I think being able to say, okay, this is what's ahead is what we need to sort of be mindful of as we go throughout this time. And this is what this looks like graphed going all the way back to the 60s, median sales price in each one of those arrows in a time where things slowed down or a recessionary period or some sort of event. In the far right, the top arrow there is where we stand today, right? But you see this upward trend. Every drought, every downturn has ended in a recovery. And this certainly isn't the first slowdown that we've seen in the real estate market. If you've been in the business for any number of years, you're used to this, you've seen it. But just to kind of go back, you think the early 80s recession, 4 million homes being sold down to 50% sales drop, took 4 years to recover. The great financial crisis, 7 million home sales drops to 3.5, 51% recovery, takes 3 years to recover. And you see they're on through COVID and present right now. But these downturns lead to recoveries. Don't be mistaken about this. The question is, how long does it take? 4 years, 3 years, 8 months. You see it right there in the middle of the screen. And what was happening with home prices? What was happening with mortgage rates? Right now, we're in a sort of flattening home price trend and a slow but downward trend in mortgage rates. The old saying that when mortgage rates go up, they take the escalator. When they come down, they take the stairs. That certainly is true today and what we're seeing. But what are the expectations for sales? If you look at home prices right now as a leading indicator, this comes from the Home Price Expectation Survey. Every one of the forecasters, whether they're pessimistic, they're optimistic, or they're widely optimistic, they all point in the direction of up. Okay, so as we go through the next few months and we start to turn the corner into 2026, you should expect that home prices will continue to rise, although at a moderate level, and that will be something as we turn the corner that you can look to and go, okay, we're coming through this. The recovery is actually expected to begin going into next year, with forecast right now, as of right now, that we'll sell about 4.5 million existing homes next year, compared to about 4 of the last 2 years, 2024 and 2025, what's projected for this year, right at about 4 million existing homes. But the bottom line is every downturn, every drought ends in a recovery. We've got the data to show that. My hope is that if you lead a team, you can share that with them. You can help them understand that that is absolutely true. I want to do something for a second. I'm going to pause for a minute and turn it over to Kate Rezebeck from our team. She is going to talk about the most important conversation you can be having right now. Oh, by the way, it has to do with builders. You're going to want to pay attention. I'll turn it over to Kate.
If you've got buyers who hit pause over the last few years, or move-up sellers still waiting for the right home, this is the moment to check back in. Because what's happening in the new construction market right now could be the opportunity they've been hoping for. You see, builder incentives are back in a big way. In fact, 66% of builders are offering them, from rate buydowns to upgrades to serious price cuts. And nearly 4 in 10 are dropping prices. The average price cut on a new build right now is about 5%. And if you do the math, that's $25,000 off a $500,000 home. Let that sink in for a moment. But your buyers may not know these options are out there. And if you're worried they'll go straight to the builder without you, just start the conversation first, because you're the one who can guide them through the choices, the financing, and the real math on what's truly affordable. You can help them find the right fit they didn't even know existed. So use this playbook to help them see what's possible. Send the email, share the visuals on social, and make the calls. You know how the game works. And now's the time to roll up your sleeves and get the work done.
All right. I think we'll keep it. That's pretty much the end from the report. I hope that report was very helpful to you. Of course, as the report mentioned, there's a lot of news media out there, a lot of opinions. Some are true, some are not true, some are fake. But by looking at this report, looking at the stats, it gives you an idea, depending on where you are. If you're in the area where the home prices have gone down, where there's a lot of inventory, where home prices have been going down, at least you know why and what's causing it. They mentioned about new homes giving, prices are down almost 5%, and that's just the asking price. They did not even mention about the incentives they're giving. More than 60% of the home builders have given some kind of recession, be it price cuts, and I mean drastic 5% is a big chunk. So that's one. They're also giving closing cost for the buyers. They're also giving free upgrades. For example, if you have a regular carpet and if you want an upgraded carpet, they're doing that. They're putting new wood floorings. Of course, they don't do that if it's already done. But if the house or the lot that you pick, and if they have not started that, a lot of them have gives you that option. They're also one of the biggest thing that they did last year. A lot of the new home builders did, like DR Horton, for example. They did a lot of rate buy downs, which means that if the rates, let's say today it's 6.38 or 6.3%, and me as a buyer cannot afford the 6.3% to buy that $500,000 house that the lady talked about in the report, then what they did was they gave you a 2.99% rate or a 3.99% rate or a 4.99% rate, which is a lot better than 6% or 6.5%. They, what you call, did a buy down. So that helped a lot of buyers qualify and they were able to buy. Now, of course, I mentioned earlier that a lot of the new construction buyers are not happy today because of the defects and the poor quality, poor workmanship that has happened. But that's a whole new story. And a lot of the buyers are not happy with it. And there is several lawsuits. Some of them are class action lawsuits on some of these major builders. And I won't get into that, but feel free to Google it or send me a direct message and I'll be glad to point you there. Also, if you would like slides of this presentation, a PDF copy or a what do you call, PowerPoint copy, direct message me, make a comment, and I will make sure I'll send it to you, include your email, or you can find my email. If you go to my description of this channel, you'll see my email, and email me and I'll send you, absolutely no obligation, a PDF copy or a PowerPoint presentation so you can have these slides. I know a lot of the realtor friends watch my channel as well. Be glad to send them to you as well. So glad to be of help to you. So let's move on. A couple of things I want to get back to is going back to the sellers, right? My channel is about sellers who also become buyers. But of course, if you watch it, it's helpful not only to the sellers, but it's also helpful to the buyers, whether you're a first-time buyer, second-time buyer, or an investment buyer. So right now, sellers are under a lot of pressure. Homes are sitting longer and buyers are very cautious. Even though home prices have dropped in certain areas, even though the rents have dropped, not by a lot, but any drop is a drop. Even though a lot of the regular sellers, not only are the new home builders giving recession, or not recession, what do you call, concessions. I'm sorry, not a recession. They are giving concessions. A lot of the home buyers, more than, I believe it's more than 50% of all the home sales, the sellers gave some kind of concession. Not a recession. I mentioned earlier they give you recession. I meant concession. So they sound so familiar. And when you're in front of a camera like I'm right now, it could get a little bit of confusing. So I want to talk about a couple of key points if you're in that situation as a seller. If your home has been on the market for 30 to 60 days and has not had a lot of activity or any offers, look at your price. Don't blame the agent. There are a lot of reasons that a house does not sell. I can give you 5 good reasons. There's 10, but I can give you 5 good reasons. But guess what the number one reason is? I've been doing this thing, selling real estate, for almost 30 years now. And I used to call sellers on a daily basis. Homes come off the market. Sellers cancel the listings or the listings run out. So I used to call them and say, hey, Mr. Mrs. Seller, your house did not sell. Are you thinking about selling again? So I have a lot of experience dealing directly. For 10 years, I used to call them. I still call them because home, even in this market, even in 2022, 2021, when the market was at peak, homes did not sell. Why in the world a house does not sell when there are 20, 30 offers on a house next door to you and yours is not selling? But the number one reason is, like I said, there's 5 to 10 reasons. The number one reason is price. Buyers did pay a lot overpriced, but they're not stupid and they're not going to pay you. If a house next door sold for 1.1 and your house is the same, they're not going to pay you 1.3 or 1.5. They may pay 1.2 because they really want it, but there's a limit on how much they can pay. So the number one reason is the price. So don't blame your agent. As long as your agent worked hard, brought in buyers, brought in offers, and you did not accept them, then don't blame the agent. It's the price. Usually, and statistically speaking. The second thing is track the median days on the market in your neighborhood and not the average. So you can't go by average, track the median home price and see how long you've been sitting on the market and what's happening. Is there activity? As time goes by, are less and less buyers coming in? If your agent's doing open houses every weekend, how many people are showing up? 1 or 2 groups or 10, 20 groups every time? And if there's a 10 or 20 groups coming into the open house for the 5th or 6th open house and you don't have an offer, Houston, we have a problem. It's the price. Because if you might say, well, the house is a fixer or a house is in a bad location. I've sold homes that are fixer. You can't even walk in there. You have to walk like this. I've sold homes right next to the railroad track. I've sold homes right underneath the flight path, taking off, not landing, taking off. And they sell because the price is right. So it's always about the price when a house does not sell. Here's another statistics. In 2008, when there was unemployment and people had lost jobs, how many homes sold? Thousands and thousands and thousands and thousands of homes. A lot of people, investors, developers, all the people who bought in 2008, they bought because the prices were low. The homes that were selling for 500,000, for example, in Corona, 20 miles from here or 15 miles from here, they were 50% of their peak price. And people were buying them like hotcakes, even in a major recession, because the price is everything. When home prices were too expensive here in California, people are going to California, people are going to Arizona, people are going to Florida, Texas, Idaho, Iowa, everywhere to buy homes because it's much cheaper. So when it comes to home prices, it's always about the price and always about the comparatives in your area. If all the homes are selling here and you're asking over here, it's not going to sell. But if all the homes are selling here and you ask over here, it'll sell in 2 hours. So it's just simple math. So be realistic about your pricing. Your competition may be a builder inventory. That means if your house doesn't sell, and there's a lot of homes like that are not selling, then they're going to sit as inventory and not going to sell. Remember, sellers are also buyers. So if you're thinking about selling your home and then moving to a different area, to a newer house or near your family or in a better weather or a view home or a newer home, remember that you're going to buy also. So when you buy, and if all the homes are selling for $500,000 in the neighborhood, why would you pay $600,000 for the same house if there's other 5 of them sold for $500,000? So same thing when you're selling. If 5 homes in your neighborhood sold for $1 million, why would somebody pay 1.3 for the same kind of house? So you have to look into what's happening in your neighborhood at any given time. So, and we always hear, and agents, if you go to your multiple listing service and ask your agent, hey, Mike, can you let me know in the city of Anaheim Hills in the last 6 months, how many homes have dropped their prices? They can give you a list of how many times the listing price have dropped, and after their listing price is dropped, homes sold. So check in your neighborhood, ask your realtor, hey, in the last 6 months, in the 2 or 3 cities around me, how many homes have dropped price and how many have sold? You'd be surprised how many homes sell as soon as the prices are dropped, because it's everything about the price. Yes, they were paying higher prices in 2021, 22, 23. That was a different time. Home prices were a lot lower. Interest rates were way lower. Now the home prices are higher. Rates are higher. There is anxiety. There is worry about unemployment, about high inflation, about a recession, tough times, a lot of tariff, very toxic political environment where people cannot make decisions because the wife is a Democrat or the husband is a Republican, and they fight and they can buy a house, and this goes on. So I've seen that happen. I was showing I shouldn't say this, but I was showing homes. While I was showing, both the wife and husband are arguing about politics. I literally did this because I didn't want to say anything. So it's a very toxic political culture. It has spread into everyday lives. I've seen families falling apart. I've seen friendships falling apart, and I've seen deals falling apart because of politics. So just thought I'll throw that in there because it is affecting our economy, positive or negative. That's what's happening. Stock market is high. It's keep rising and rising and rising. So that's good news. On the other hand, a lot of the consumers are complaining because the high grocery prices, high utility prices, high insurance prices. So it's working both ways. So whether you red or blue, I'm just throwing it out there. So let's talk about another thing that's affecting the home sellers, what's happening right now. In fact, I have a video coming out next week. It talks about how the homeowners are very, very equity rich. They have a lot of money. Homes that were bought 20 years ago, 30 years ago, in certain areas, they have quadrupled. So those sellers have a lot of equity in there. If they bought the house for $300,000, especially in Southern California, they're worth over $1 million now. So they have a lot of equity, but they are house poor, equity rich and house poor. And this is true anywhere in the nation. A lot of the homeowners who've been there for 5 years, 6 years, 10 years, 20 years, 40 years, don't have any cash, and they're having a hard time making bills or paying bills because several things. Number one, a lot of the seniors, especially because if you've been there for 30, 40 years, you're most likely a senior. They're probably on fixed income. They don't have additional income, and they probably houses were paid off. But what's happening is, even though the mortgage is paid off, principal and interest, they still have tax and insurance that has skyrocketed. So if they were paying $1,000 in tax and insurance, now it's $2,000 a month, just as an example. Number two, every home needs maintenance, right? And the older the home, the more maintenance it needs. So everything has gone up. You go to Home Depot, you go to Lowe's, you go to Ace Hardware, just to buy a little screw is $50. I'm just kidding, but it's very expensive. Then when you call a guy to come and repair, I have a rental and the toilet did not flush. So the tenant called me. I sent a plumber over there, and just to replace the valve in the toilet tank, he charged me $525 as a quote. I said, "What are you charging me for?" He goes, "Well, it's a Sunday today, so I'm charging you $100 service call." He's charging me $200 weekend rate, and then he charged me $275 for a little part that cost $50. So luckily, I didn't have to pay him because it was a free service call. So I called another plumber, and he did the same job for $250. That was expensive also, $250 to replace a valve. I could have gotten a brand new toilet for that, but the tenants were in there. I did not want to inconvenience the tenants, so I just had them change it. But if I would have had them change the original plumber, he would have charged me $500, even though I paid $250, and that's very high also. So as a homeowner, and the houses are getting older, I need a paint job on my house outside, and just the outside paint quote, outside only, is $7,000. One of my clients just painted their house. It was about 3,200 square feet home, just 3 miles from here. They paid $14,000 just for paint in and out. Very, very, very expensive. If you're in the house for 30, 40 years on a fixed income and it needs a paint job, it's very expensive. So what I was getting at is, being house poor or having a lot of equity and not any cash, they can't afford to fix anything. They can't afford to do the paint. If the air conditioning breaks, they can't afford it. So it has become very, very, very difficult for homeowners to keep living in there, to maintaining the house. So another thing is, the homeowners association is also increasing at an alarming rate. My HOA, and I have two of them, and it's doubled in the last 3 or 4 years. So I'm paying double the HOA in just last few years, let alone how much it was when I bought this house over 20 years ago. So it's very, very expensive. HOA is up, property taxes are up, insurance is up, maintenance is up, and all the utilities are up. Water bills are skyrocketing, electric bills are skyrocketing, gas prices are skyrocketing. And what I'm hearing is, we've seen nothing yet. But here's another thing that people don't talk about when it comes to housing and all the expenses, is your medical bills, because that affects your bottom line pocket. So how are your medical premiums? When you go to a doctor or a hospital, how are you paying your deductibles? Are they pretty high? So, and is the deductible so high? Because the higher the deductible, lower the premium. So if you do end up in a hospital or go to the doctors, you have to pay the first $4,000-$5,000. I think my deductible is $5,000 per year. But I know that I could have gotten cheaper insurance if I would have gotten a lower deductible. But by getting a higher deductible, I'm getting better insurance. But then it cuts into my pocket. So if I'm on a fixed income, on top of paying the maintenance, taxes, insurance, HOA, and maintenance and upgrades, now I have higher medical bills. And I haven't even talked about groceries. And so we won't even go there. So anyway, I wanted to bring that out to you. There's a few more points I wanted to talk about. Is if you decide to sell, you cannot control the market, right? The market is what it is, whether you're selling right now or thinking about selling in 6 months. If you have to sell, the market is in your local neighborhood. It is what it is. It's either very strong and active, or it's slow and inventory is building and home prices are dropping. So if you are thinking about selling or moving, you need to think strategically and start thinking ahead on what you're going to do, how you're going to do it. You may want to talk to a realtor, a lender, your accountant, see if you have any capital gains tax, because if you have owned your home for a long time, you can get a deduction of up to $500,000 if you're a couple, or $250,000 credit on your taxes if you're single title. And that's where your accountant can help you. So to prepare your home, you have to price it right. You have to stage it potentially. You have to declutter. You have to make the curb appeal very inviting. Do some landscaping and trimming. If you have a yard that is messy and a lot of things lying around there, all these things needs to be taken care of today, because buyers have become picky. Those days are gone where you let the buyer come in, 20, 30 buyers come in, and you tell the buyer, hey, take it or leave it, and I want $100,000 more, or $50,000 more, or $20,000 more. Those days are gone. As I mentioned earlier, more than 50% of all the homes sold so far this year, sellers have given concessions. So now if your dishwasher is not working, if there's a faucet leaking, a shower leaking, the sellers may come back. The buyers may come back and tell you, hey, Mr. and Mrs. Seller, we'll buy your house. We'll give you $475,000 instead of $500,000. And we also want you to fix A, B, C, D. I'm in escrow right now. We're closing in 2 weeks. I sold pretty much a new condo. It's sold near $700,000. Pretty much new, very, very well kept. When we did the inspection, there were 6 or 7 things popped up, little things, not much. Guess what? The buyers wanted all of those things fixed, even though they were very minor, because she's a first-time home, very nervous, doesn't have time to fix anything, doesn't know anything about fixing. And guess what? The sellers agreed to do all those works. So be prepared to be flexible on your price, be flexible on your terms and conditions, and be flexible when it comes to giving concessions, not giving recessions, concessions. So I wanted to leave you with that. If you have any comments or questions, please make them below. If you wanted a copy of that report from Keeping Current Matters in a PDF format or a PowerPoint presentation, direct message me. I'll be glad to send it to you. I'll be back next Tuesday, 5 o'clock California time. Thanks for watching. I'm Mike Patel, Home Savvy Central. Sell smart so you can gain more. Thank you.